Everybody, this is Jason Matthews, your president and CEO of Gibson Monroe Wealth Advisors and Matthews Financial Insurance Solutions. Thank you all for getting on this live stream this morning on KTVU Mornings on 2 on the 9. And the reason they had me on today, let me just take off these glasses, make it a little easier. The reason they had me on the meeting today or on their show today live, because the Federal Reserve, Jerome Powell, who I say is the most powerful man in the world because he has the power to control interest rates, have decided to they're having their July meeting today, which is huge news right now. And because of that news, we want to come back with the access to give some content, some information about our views about how we feel about what's actually going to happen. And what I will say is today was the meeting before the meeting. And actually, the Jerome Powell July meeting press conference is happening right now as we speak. Now, here's my view today, as this is a precursor to about what's about to happen in the month of September meeting, which I think is highly important for a lot of people as well. But before, if you guys have anything, I just want to have extended time. As oftentimes on the news, I only have a few minutes to talk, to give my opinion on how I really see things and how I see things where they're actually potentially going. And also, this is a great way. If you're on Facebook, LinkedIn, or YouTube right now, you could give us your insight. I can answer any questions for you guys as well. And so make sure you put that in the chat, as this will be a great time for you guys to have that as well. And before I get started, I'm going to ask everybody, if you're on this, do you feel like interest rates will go down in September? And love to hear you guys' questions, your guys' comments on that as we're on all platforms. So here's my opinion on what's going on. This is the meeting before the meeting. So in the month of September, we are expecting people, or I say the market and the comments are expecting that interest rates will drop in September, right? That they're going to drop rates. And right now, the stock market and other markets are baking in interest rates to be cut. That's why you see today that the stock market today is doing quite well. And because of that, we're seeing that the market is getting very excited, because what lower interest rates mean is cost lower to service debt. That means that people can borrow more money and it's cheaper, and it stimulates the economy even further. Also, another thing is people are expecting that we might be having a mild recession in the fourth quarter. And to prevent this mild recession, we need to stimulate the economy so it can keep it going. They want to lower interest rates. Also, people are saying that right now that looks like the Fed's might control inflation and tamed it down back into their target number, which is 2%. But here's my thoughts and my opinions right now. Back in December, the market baked in that we're going to have 6 rate cuts. And right now, we're in the second half of the year, and there has been completely zero. The remarks of Jerome Powell and the Federal Reserve is they want to see if the market was going to wait and see how inflation is going to be. And they're looking at a long-term trend on how inflation is going to be. They were just not looking at just 1 month. That might be great, but over a long period of time. So in the month of July, the June numbers were released, and the numbers for PCE and inflation numbers were great. They were fantastic. But if you look at the month of April and May, there were revisions, and those revisions were not downwards, but upper than what they expected. So if you look at PCE, right, those numbers for PCE with those revisions went up, and the 6-month trends for PCE numbers are high. Because of that, here's my opinion for this. Interest rates are not going to drop in September. That is my view on it. My view is interest rates are not going to drop down. I think interest rates might stay where they're at. Now, I don't know. I don't have a crystal ball because I know a lot less than the people in the market. But I feel like overall, we've been very ambitious, hoping that interest rates are going to go. But if we look at the jobs market, we see how the economy is rolling right now. And it seems like we have been able to sustain ourselves in this higher interest rate market that's more normalized, even though the previous decade we had historically low interest rates. And because of that, I want to say is we just need to. People might get excited for now, but this is a definitely time where people should be pausing and don't jump the gun on things. Another thing, if interest rates do cut, what people should be planning on, especially retirees who have a lot of money in fixed interest rates and bonds, what they should be doing instead of doing short-term T-bills, what a lot of my clients have been doing 6 months, 3 months, they might look at lower interest rates. If you feel like rates are going to go down, you should buy lower, longer-term bonds because now you're getting a higher yield compared to what's going to happen with short-term rates. Also, a lot of people are assuming that soon as interest rates drop down, that eventually, as soon as interest rates drop down, that means that the 30-year mortgages, 15-year mortgages, everything else rates going to drop. No, it's just a historical trend that interest rates will eventually drop. They do not drop overnight. So yes, the short-term interest rates that banks borrow money from the bank, that's what the Federal Reserve have control over, will make sure. But the overall market interest rates do not control that. So with that being said, don't expect that, oh, we're just jumping from this interest rate at a 6-7% 30-year mortgage, we're going to drop down to 4 to 5 overnight. That is more of a long-term plan and strategy for that if interest rates do drop. But if they don't, just keep watching the long-term trend on how they're doing and pay attention to revisions, because revisions are always cut because there's such a pressure to push out these numbers. They have to double check and either those numbers, and oftentimes those numbers might be a little bit different. Now, based off of that, how do you guys feel about what I said? Do you guys feel like rates are good? Interest rates are killing you? Are they not? How do they really see you? Another thing I say is banks, credit card companies are taking advantage of these higher rates by charging even higher than they're still borrowing, especially credit card companies that are charging 25 to 30% interest rates on their funds, which is highly expensive compared to it, right, on 25 to 30% to use their credit card, which is highly expensive right now too. So they have taken advantage of the situation and making a record amount of profits. Now, the canary in the coal mine we cannot forget is the office space. Because of the higher interest rates, we're seeing office space, malls, hotels are paying higher money to borrow money on the commercial real estate side. And we're still hearing, we're seeing the lurks of some companies are giving their keys, like in San Francisco, the mall gave their keys last year. The Hilton gave back their keys in the Park Hotel. But we could definitely see at that time that higher interest rate, these higher rates are going to kill the commercial, a lot of small regional banks, because a lot of these people want to give back their keys go foreclose because they can no longer service that debt, because most commercial real estate are in shorter term rates, 3 years, 5 years, 10 years, compared to mortgages were often 15 years or 30 years. And at that time, most people do not pay it off. There's usually a balloon payment. And oftentimes in a low interest rate environment, which we've been having this last decade, people refinance and never pay off those properties. But now, because of all this money borrowing, instead of refinancing and getting a new loan, these people have to come up with the money, and it's going to be costing them more to borrow to pay off that loan. And we're definitely going to see more foreclosures happen, especially as businesses are not coming back to the office space. So there's not as many offices. People are not going to the mall like they used to. People are buying on Amazon. So I think that's going to be a very, very, very tough time. And usually the paper that people are borrowing from are your more small regional banks, because they're more heavy towards the commercial real estate side. So they're very more sensitive to hoping that interest rates go down so people could refinance at a cheaper rate, or whoever borrows that money compared to a higher rate. And they say, you know what, our profits, when we do the math, it just doesn't add up. We're going to have to just give you back the keys or your foreclose on, which we see a lot of mall operators do as well. So those are what I see what it is. I know there's a lot of hope right now of lower interest rates, but if you're a retiree, there's a baby boomer, which is 60% of the voters in America. This is actually a great time for you. As like I said before in my past videos, is you're able to borrow, you're able to get a lot higher interest rates than you did in the past. Just a couple of years ago, you gave $100,000 or $1 million to the bank, you got less than 1%. But right now, we could easily get 5% of our money. So if you gave $100,000 to the bank to give you 1%, that's $1,000 a year. Compared to now, where you give $100,000, you're getting, 100,000, you're getting over $5,000. That means your money, your interest have now 5 times what it was getting previously, which is great, great, great for baby boomers and retirees as they are on fixed income and now they're getting a higher rate of return on their money. With that being said, I just want to leave those comments. If you guys want any additional information, if you guys like to have set up a consultation to see how these interest rates affect you, please reach out and you can email us, or which is about to be in the chat, or you can feel free to give us a call as well. And also feel free to give us a call as well. And let me give you guys our office line number as we speak to set up a consultation. With that said, I hope you guys have a good day. I hope you guys found this interesting. If there's any topics you guys like to hear about or want to discuss even further, please let us know. Once again, my name is Jason Matthews with Matthews Financial Insurance Solutions and Gibbs Monroe Wealth Advisors.